Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hello, good morning.
Good morning, real estate investors. Welcome to the Canadian Real Estate Investing Morning Show. On today's show, we're going to be diving into an extension of yesterday's episode from a listener question that was sent in. We're going to be talking about why 99% of real estate in Canada doesn't actually make a great real estate investment. Mm-hmm. And everybody says real estate investing is the best. You got to invest in real estate. That's how you make your money. What is it? Such and such percentage of millionaires made their money through real estate, and all these, these little one-liners and quotes. It is true. It is true. You can make a lot of money in real estate, but a lot of people lose money in real estate. And I think a lot more people lose money in real estate than they do actually making money. So we're going to talk about how you can go about finding the right properties to ensure that you don't become someone who loses money. You're actually someone who actually makes money and lasts and sees their way through it. So that's what's going to be going on for today's show. Yesterday's show was popular.
Indeed. Did you get lots of feedback?
Yeah, a lot of negative. But
What?
I think that if I can get 10% of the people reaching out to me and be like, "Ha, you got them, you got it," and you know what, you were right, and that's what I'm looking for. I don't expect everybody to be happy about it. And I didn't expect everybody who jumped to go listen to yesterday's episode to be completely satisfied with it. I know that a lot of bad news tends to do better. Bad media tends to do better in the news than good. And
oh, yeah. People love to have an opinion and they love to complain. You'll see a lot more of that online than you will like positive input or people agreeing or anything like that. So, but you intentionally stirred the pot.
Yeah. Just a quick question. Why wasn't everybody happy that we didn't lose money?
That's a great question.
I just don't understand that. Is it my demeanor? Is it my confidence that is rubbing people the wrong way? That does tend to happen. Mm-hmm. People don't like confident individuals. People feel like, they need to be taken down a peg or two. My demeanor and my approach is built on real, true confidence. And I find that my confidence actually helps people build confidence in themselves in order to be able to do what they need to do, the hard things, in order to build a better life. So I do that on purpose. Mm-hmm. But it is a little hurtful that not everyone reached out and said, "Hey, I'm really happy to hear that you didn't lose $1 million. I was really worried for you because I think that you're a good person. I like what you're doing, and we appreciate everything you do for the community and that you help, so many people across Canada. I'm really happy to hear that it was just a joke." Mm-hmm. Isn't that a little concerning?
Yeah, for sure. But I think, in our position, it's inevitable that there are going to be people who, A, don't like us, or B, just don't care.
Is it a competitive thing?
Well, I think you were absolutely right when you said that a lot of people don't like confidence or ego. People who have ego or who are confident in who they are. And all that is just something, it's a reflection of that person. If there's somebody out there who just rubs you the wrong way, who you just can't stand, you're just watching them and you're like, ugh, you know what I mean? Like you get that feeling. There's usually something in the way that they are presenting themselves that either you lack or you wish you had. I see in the comments here, Carmen says they're jealous. Yeah. Jealousy. That's usually what's at play. It's not that like you are some absolutely horrific person that I can't believe that they're out there, being that person. Right. It's not that. It's that they're jealous. I mean, Carmen put it perfectly. I just don't like saying it that way because it comes across like, oh, you're just jealous.
Yeah.
But there's just something missing in themselves that they wish that they had that confidence. They wish that they had that boost of ego in what they're doing, right? So
I think we both always tried to have a very humble approach, and being humble people and not over delivering or over polishing to almost seem like more than what we are. And I think that we're very down to earth individuals. You know, for goodness sake, we bring our 11-year-old daughter on to do the weather with us. You know what I mean? And we bring her to all of our events. We are normal, regular, everyday people, just like everyone else, who, you know, had jobs, who worked our way, you know, saving up and making sound and, you know, decisions and investments to get us to the point where we are today. And we've shared that entire journey.
Yeah.
We've shared that,
Well, not
the entire journey, because like social media wasn't as much of a big thing when we first started. But, you know, I was just talking to someone yesterday on a coaching call. Since 2017, I've been sharing the entire journey and humble beginnings. And I've always kind of tried to stay as close to the ground as possible so that people can see that anybody can do it.
Yeah.
And what that does is it creates hope, as opposed to, you know, we talked about the 4-foot stage yesterday. You know what I mean? A lot of people will literally just go and build a 4-foot stage and stand up there and it's just pretend to be something more so that people will listen to them. But I've always found that, you know, being down to earth and being real and offering free guidance for everybody, with asking for nothing in return is a much better approach, and it's more lasting. So, like I said, it is a little hurtful when, you know, I would have hoped personally for hundreds of people, if not thousands, to reach out and be like, I'm really happy to hear that it was all wrong. Because you know what, I you know, and there were people that did send these messages. I've been listening to you for so long. I was shocked to hear that happened, because that would never happen to you guys. And I said, thank you. I appreciate that. So I just would have hoped to have heard a lot more, but there's nothing I can do to control that.
Yeah.
That's just people, and people are hurtful and insecure, and it is what it is.
Yeah.
But I'm really happy that so many of you guys did reach out, and I'm so grateful for the messages, and I'm happy that for the people that actually, because I can see the watch time, I can see the listen time, and I can see how long people listened, and that was one of the retention, the length of listening and watching on the video and the audio podcast was one of the longest we've ever had. And so that tells me that people got through the first couple of minutes and were like, and they actually listened to it. And I think that if everyone actually listens to that episode yesterday, they're going to learn something very, very valuable about real estate investing. And I hope that they come back today, because we're going to continue on that discussion to teach you how to go about investing in real estate the right way. The right way. Because I want you guys to actually succeed. If you just go and buy a piece of real estate, just hoping that it goes up in value, and you think that that's how you're going to get rich, not how it works. That's how a lot of people do it. And like I said earlier, a lot of people get wealthy doing it that way. It is a decent investment to, you know, asset class to invest in. However, a lot more people don't make money in it than the ones that do. And for that reason, I think that's why real estate sometimes gets a bit of not a bad reputation, but a bad rap. You know what I mean? Like a lot of negative people will be like, oh yeah, but I lost money in real estate. It's a shitty time to do it. When I hear things like that, all I hear is someone who just doesn't quite understand how to do it properly.
Yeah, absolutely. And that's exactly it. And, Wayne, I'm just like the chat's pretty chatty this morning.
Ooh, we got some chatty Cathys this morning.
Chatty.
So we're live on YouTube right now. For those of you guys that don't know, we broadcast the show live at 7 a.m. every weekday morning on YouTube. All you got to do is just look up Wayne Hillier. It's on my personal channel, and you can join us live or listen to the recordings afterwards on all the different podcast platforms and on YouTube as well.
Yeah. So in the chat, like at first everybody's like, what? There was people actually like hoping that you lost money. But then I think the verdict here in this community and, you know, in our wonderful community is that they were all like, we just knew that, like, obviously it wasn't real.
There was just as many people that reached out immediately when it was released. And they're like, yo, what the fuck?
Yeah.
Because they know, they just knew that there was no fucking way that it could have happened.
Yeah.
what we teach and what we do is just so incredibly sound.
Yeah.
And it's just anyone who actually spends the time to listen and understand it, they're like, oh yeah, no, there's no possible way you could lose money. It's just not possible.
Yeah. Yeah. I said we had our weekly group coaching call for our real estate investing master's mentorship program last night.
Yeah.
And I said to a couple of our students that I'll just say their names. I don't think they'll mind. Leon and Kyle, who are absolutely killing it. We've talked about them before, but I said to them that I was so excited for them because I know that there's absolutely no way for them to fail. I was like, you guys can't, you literally can't fuck it up.
Yeah.
If you keep doing what you're doing and investing safely in the properties that you're investing in, there's literally no way for you to fuck it up. And I think that is just such a cool thing as a coach and as somebody who's, helping people do what we're doing and invest in real estate, to be like, okay, you guys, okay, so now you got this. You are going to be successful. You are going to reach your goals. Mm-hmm. And there's nothing that you can do that's going to mess this up unless you completely take everything that you're doing now and flip it upside down.
Yeah.
Right. And so I think that's so cool. And it's the same thing. People, that's how we are investing. So people see this thing that it's we lost, whatever, was it $1 million? Yeah. And they're like, how's that possible? That's not even possible, because it isn't possible.
It doesn't happen. Yeah. It can't happen. So unless, of course, we just all real estate that we owned went down so much in value. It would have to drop. I don't even know. I have to think about it sometimes. I have to think about it. How much would our real estate values need to drop? And then for us to sell in that exact moment, how much would it need to drop our portfolio in order for us to lose money? It's not possible.
Yeah.
We buy, the properties that we buy them so well. I'm going to talk to you guys. I don't have time to talk about it today on today's episode, but I just removed conditions on a property yesterday. And through my negotiations, after we got the home inspection, I just knocked off another $15,000 on a property that I had under contract for $195,000. I knocked off $15,000 after the home inspection.
What percentage is that? I can't do that quick math.
Between 10 and 15, I think, isn't it? No, that's not right. I shouldn't even. Why do I even talk? 5 and 10, I think. It doesn't matter. You figure it out.
I'll figure it out.
5 and 10. But yeah, I was able to do that. And I think I even talked about it on yesterday's episode, the day before, that I said that I'm going to be working on going through the condo docs and the home inspection. And then I'm going to be putting together my response for the realtor. And I did it so fucking well. And then, of course, we got an amazing realtor as well. I just handed him my notes. And I said, here's what I've put together. It's a little aggressive. You're the one dealing with the other realtor, the seller's realtor. You can dial it up or dial it down as much as you need to, but here's the outcome that I'm looking for, and here's what I'm willing to settle for. Here, go to town. And then he went to town, and within 5 or 6 hours, he came back. He's like, done.
Yeah.
got the full 15. And so we were really happy about that. And I say all that because this is what we do. This is the skills that I've developed as a real estate investor. And, it's through tons of experience, and we teach this to our students, that, we made money on the buy. Mm-hmm. And that property was also already undervalued. It's already undervalued, which I don't have time to talk about today, but I probably got that property for at least 10 to 15% under the actual market value. So right on day one, I'm already adding a cushion. Not to mention the fact that, it's an extremely good cash flowing property. So I got a huge cushion on the cash flow. So rent can go down, interest rates can go up, mortgage payments can go up. I'm not going to be fazed by it at all. And so if I even bought it at 195 or even 180, you know what I mean? How low would the value have to go for me to be forced to sell? And then I'd have to be forced to sell. You see what I mean? It just doesn't make any sense.
Yeah. Well, and then like we talked about yesterday, it's not just the value of what you bought it for minus the value of what you sold it for. It's also about the money that you made in between when it was
The
functioning
cash
as a
flow
cash
and the
flowing
mortgage
rental
pay down.
property, right? And so it's like, even if, like, and I feel like people look at it so one dimensionally. It's like, well, I bought it for this and now it's only worth this and I had to sell it. So I lost 50 grand or like whatever it may be.
Yeah.
But they haven't taken into consideration all the money that they made over the, 5, 10 years that they held it. It's like, I'm pretty sure that's not the case.
Yeah. Yeah, absolutely.
Yeah.
So once you understand all that stuff, you're going to realize that real estate investing is the safest and most reliable investments that you can do.
Mhm.
And also, there's so many other great things about investing in real estate as well that other investments just don't have. And one of those things is leverage. And I think the leverage is going to be probably our
Word of the day.
word of the day for today's episode, is because that's what really differentiates it from other forms of investment. Because a lot of people will hear things like 99% of houses or real estate in Canada does not work as a good real estate investment. They're going to be like, well, why the hell would I do that then? You know what I mean? If it's that, am I seriously looking for a needle in a haystack?
Yeah.
It sounds like I'm going to probably mess this up. So why wouldn't I invest in something else that's a little bit more tried and true? And it's because you can't compare real estate to other types of investments. That's the thing. It's because real estate is in its own league and it's its own thing, and it's very different. You can do things in real estate investing that you can't do in other investment classes. And we're going to talk about those things today and how it differentiates from other investments and why it is superior. And once you understand that, you'll understand why real estate investing makes the most sense. And yeah, it is a little discouraging to find out that most houses or most pieces of real estate don't actually work. But that's no excuse not to figure it out, because I just picked up another one yesterday, just remove conditions. I got a bunch that are already, in the pipeline that are coming. I've got other ones that I just took possession of and that we're doing work on, or they're already rented. Like, we can show you if you're willing to learn, right? It just depends. Do you want to sit there and be stubborn and ignorant? Or do you want to actually take that step to learning for yourself so that you can realize all of the opportunities that everybody else is learning and taking advantage of that I'm doing, right? And again, I hope that my confidence doesn't come across the wrong way and rubs you the wrong way. It's not my intention. My confidence is here, and my humbleness and my down to earth approach, and Gabby's as well, is that you guys can see that normal people can do this. You do not have to be a big institutional investor. You do not have to be a millionaire. Anybody can do this. And what we're doing is we're helping everyday folk pulling themselves out of the lower and lower middle and middle class into a, I don't want to say like a higher class, but like into a better financial position, creating a better life for yourself, rather than just, because nothing else is coming for you. I'm going to go off on a tangent here when I know I need to take a break, but the truth is nothing else is coming for you. No one's coming for you. You're going to have to do something for yourself. And it starts with you, because your kids aren't going to take care of you. Your parents aren't going to take care of you. Like, nobody's going to take care of you. No one's coming. Getting up every day, listening to this podcast, going to work, and then coming home and eating and taking the kids to baseball, and then getting up and do the same thing tomorrow or Monday, and over and over and over and over again. Nothing will change. You're just going to realize that tomorrow is going to turn into 40 years from now, and you're going to be in your 60s, and you're going to be like, why didn't I do something different? And that's what we're trying to do, is we're just trying to show you that everyday normal people can do this. So we're here for you in order to teach you what you need to know to fill those gaps and those voids so that you can actually figure it out for yourself. This podcast and what we do is a very nuts and bolts approach. We're not talking about macroeconomics. We're not talking about inflation. We're talking about what you need to do today. You actually go and do it, right? And if that interests you, then keep listening. And when we come back from the break, we're going to talk about today's topic. We're going to answer the question that came in from the listener. We're going to talk about why 99% of real estate does not make good real estate investments. But we're going to talk to you about why it's still worth it to go and look for the 1%, and why leverage differentiates real estate investing from all other types of investments. We'll be right back.
Real estate investors need to treat debt differently than homeowners, and at Kirkland and Brennan Mortgage Group, we understand that. For the last 11 years, we've helped real estate investors plan and build their portfolios. We understand how to help you avoid fees, penalties, getting yourself stuck, and making sure that the deal you're doing today doesn't stop the deal you want to do tomorrow. You can reach out to Keaton, Keaton, at kbmortgages.ca. Put plan on the subject line and we'll help you build a plan and then realize it for your real estate goals. We also coordinate with the other professionals like your accountant, lawyer, realtor, and we will help you build your portfolio. So reach out, we'll do our best to help. Thanks, guys.
You've got showings, lease signings, suite renos, condo board meetings, credit checks, mortgage financing, and every so often a tenant clogs the sink because they shoved macaroni down there. Stop. Breathe. Leave the bookkeeping to Fingo. Fingo is specialized real estate bookkeeping by real estate investors with tailored services for maximum returns. Save time. Enhance your returns. Claim the plumbing repair for that ridiculous macaroni fiasco. Book your free consultation at fingo.com.
Summer. While everyone's getting distracted, this is when the market gets quiet. Not because the opportunities disappear, but because the people do. Vacations, long weekends, these are the distractions I'm talking about. And that's exactly when serious investors make their moves. At Calvin Realty, this is one of our favorite windows. Less competition, more flexibility, and sellers who are actually open to negotiating. While everyone else is stepping away, we're stepping in. If you're looking to buy right, not just buy fast, this is your edge. Calvin Realty. Opportunity doesn't take time off.
And we are back. And I know I was going off on all these different tangents here, but there was something that I needed to say, and it's really important, is that, part of us, making sure that you guys understand what is working today in Canada, in whatever province, specifically in Edmonton right now, where we're investing, most of our investments, is that we really want to make sure that we're always letting you guys know what the big opportunities are for investors today. Like right now in this moment, what can you be doing that's going to help you take your real estate investments to the next level, to get the highest returns, to get the best cash flow, and to have the lowest risk possible? And that right now, the next big opportunity is in garden suites in Edmonton. It's you're going to hear me talking about it a lot, because not for any other reason, but the fact that I want you guys to do it. I want you guys to do it while it's still great, because I don't know how long it's going to last before everybody's doing it, and then all the opportunities are gone. One of our students, I was sending him, he's getting ready to, he's got a couple properties that he could be building garden suites on, but he's also looking at other properties as well to purchase. And I've got searches set up, and I was sending him all the links and stuff like that. Look, man, look, they're all here. Look, you can do this, you can do this, you can do this one, you can renovate inside, you can do this, and look, it's big enough for this. So there's lots of opportunities right now, tons. You're not on the same? I have it sent to a different email account so it doesn't bother you during the day.
Thank God.
But there's tons popping up this week, tons, and there are so many opportunities right now. But the second those properties, the values of those properties go up, because people understand that this is an untapped opportunity that people that don't know about it yet. As soon as people know about it, instantly those properties are going to get snagged, and then the values are going to jump up, and then the numbers won't work anymore. So you have a tremendous opportunity right now. You're going to hear me talking about it a lot. It's for you guys. And we're here to give you everything you need, from teaching you what types of properties, where, how much it costs to build, and all of those things. So it's a little too much for the podcast. So what we've done is we're holding a training seminar tonight in Edmonton at 6 p.m., 6 to 9 p.m. It's only $20. There are still a few tickets left. Okay.
Yeah.
The Edmonton Garden Suites 101. Very simple. We're going to really just break it down to the nuts and bolts. We're going to talk to you about what types of properties, what the size requirements, like all the setbacks and the lot ratios and all those types of things, the height requirements, all those things, everything you need to know about garden suites and building a garage suite, a ground level garden suite, a duplex garden suite. So I'm talking about one on the ground, one upstairs, or if you want to go full-fledged, you want to go all the way, you can do a fourplex garden suite, which is 2 on the main floor and 2 up top. Mm-hmm. And that's all of our projects are fourplexes.
Yeah.
We're going to be doing a couple duplexes here in the near future on some of our properties. We haven't mapped it out yet, but tremendous opportunity to really get the highest and best use out of the existing properties that you have, or to realize untapped potential for real estate that is in the market right now that nobody knows about, that is completely undervalued because nobody understands how to get the full potential and the highest and best use out of those properties, those lots. So much opportunity right now, so much opportunity to add hundreds of thousands, if not millions of dollars in equity to your portfolio.
Yeah. It's exciting times.
All you have to do is simply understand the strategy and you will recognize the opportunity.
Yeah.
Okay. So tonight you can get tickets at reimasters.ca. $20. Fuck, if you'd show up and just throw a $20 bill, I don't give a crap either. I to be honest, I just want you guys there. I just want you guys learning about it. That's it. This is not a profitable event. We're just covering the cost of the venue, and we're just going to sit there and we're going to tell you all about it. We got a great panel of experts. We got Edmonton Garden Suites Limited on site as well. The builders are going to be there to answer your questions. It's everything you need is going to be there tonight. Okay. I'm going to try and record it. Possibly, maybe, I don't know. I told everybody no, I'm going to try, but don't worry. Like, if you can't make it, we'll do another one soon. Because
make it. Don't
I
rely
know,
on
I don't want to
make
give
it.
anybody a back door, but at the same time, that like,
Or false hope. Maybe we don't.
Maybe we don't. Maybe we don't. I think that this should, honestly, it should be a priority.
I think
for
if you
people.
don't show up tonight, you are missing a period of time of opportunity. That's
100%.
all. That's what I'm going to say is that, like, if you aren't getting into that room tonight and this is something that you're actually interested in, you are going to be behind of where everybody else is who shows up tonight, because the opportunity is now.
Yep.
It's not next year. It's not in 2 years from now. It's maybe not even 6 months from now. It is today.
Yeah.
That's why we're holding it today.
Yeah.
So get in the room, do what you got to do, get a babysitter, bring your baby. Like, do what you got to do.
Yeah, 100%.
Be there.
Even
if you're not sure if it's something that you are able to do, I think you might be surprised at, that there's financing options, that there's I think people might think like, oh, I don't have enough money for that, or, whatever it may be. Show up and understand what the opportunity is. Don't assume.
I was just correcting one of our students yesterday, the day before, about something they had thought. Oh, I thought you can't do it because of this. I'm like, no, here's the thing. You don't know what you don't know. So you got to show up to find out the information.
Even if you're just curious.
Yeah.
Show up, learn.
Yeah. Stacy's here, says, I'm so glad you're putting this great info session on. I believe he's coming. Yeah.
Thank you, Stacy.
That's fantastic. Who else we got? Anybody else joining us?
Josh and Jess are coming.
Josh and
Dennis
Jess are
is
coming? Who?
Manny's coming. I don't know who's all here, but yeah, we have a whole bunch of people here that will be there tonight. So we look forward to seeing you guys as well.
Absolutely.
Yeah. Wayne, sorry, are we good? Because I had a couple thoughts while you were talking.
Yeah.
Well, first I wanted to read this comment from Kirsten because it ties into what I want to say. So Kirsten in the live chat had a comment, and it says, going back to our previous conversation, your confidence is to make money and to succeed, not to piss people off. If you didn't have it, you couldn't teach others. People can get over that. People can get over that you're good at what you do. And then Chris went on to say, Kirsten, if you have a mic, you have my full permission to drop it. Well said. And what I wanted to piggyback off of that and what we're just talking about now is that I think what's happening right now in this real estate investing community is that we have so many people who have built a 4-foot stage and who are talking about all these opportunities and all these things you can and should be doing. But it's kind of like most of it is like hypothetical, or maybe even something that they did years ago. And now they're just trying to make money educating people from it. As a way to like keep themselves relevant or keep them going, and those types of things. But like, here you are, Wayne. I'm gonna just shift the light over to you. Is you are talking about opportunities that are here, that are present right now, today, that are working, and you're not just saying that they're working. You are doing it and showing people that they're working.
Yeah.
You are not spewing some bullshit about something that like some gimmick or some, like I just said earlier, something that like you did 4 years ago. You're not sitting here talking about a fix and flip opportunity that doesn't exist. You are talking about something that is right here, right now, working because you're doing it. Mm-hmm. And we need more of that. We need more of that education. We need more, people saying, hey, look, this is what you can do. See, I'm doing it. And we have a massive lack of that right now. Yeah,
I agree. I agree with all the nice things you said about me. It's all about staying as close to earth as possible and just making sure that people understand that that it actually does work. And I think that what we do is we create hope. And I hope that you all are hopeful and that it does inspire you. I hope that, I compete on the same properties as you guys. I hope that you guys, win and lose negotiation battles, amongst us. There's nothing worse than people tell you like things that used to work or like tell you about what they did. You know what I mean? And then you try and replicate it and it doesn't work because the timing doesn't work anymore because everything is cyclical, right? So we try and be as transparent as possible so that people can actually do it and not talk about hypotheticals. And I don't know how this is going to come out, but I don't know of anybody else in the industry that's actually talking about and teaching that's actually doing. I don't know anybody else in the industry that actually is. Everybody talks about all their wins and all their successes from before. Nobody talks about what they're doing right now. And I think that's the most valuable, right? And I'll never, ever, ever, overinflate or opportunities or over excite anyone about anything. I always try and stick to the facts. And it doesn't benefit us by saying things like 99% of real estate in Canada does not make good investments. How is that? I mean, if I were trying to sell you something, I would tell you.
That's not going to sell a mentorship program.
No, it's not. It's actually scaring most people away. Actually, in fact, a lot of what I hear is that like, yeah, you said this, so I just thought it wasn't a good idea. And I'm like, why the fuck did I say that? It doesn't exactly help on the sales side of coaching and mentorship. But it doesn't matter. To be honest with you, I don't want those people that are that easily,
swayed,
swayed, but or discouraged. But the truth is that I want everybody to understand what this is for what it is. And so that if you go into it with the right understanding, with the right perspective and the right attitude, you know how to handle situations properly, and people won't get knocked off and discouraged easily as they start diving into it, because there's a lot of things that can scare you in real estate investing. You know what I mean? The tenants and the toilets and stuff. There's enough of that to scare people. If I can really if I can pull back the curtain as much as possible to tell you what it really is beforehand, you're more better prepared and acclimated so that you actually do succeed in it. Yes, 99% of real estate in Canada does not work. And I'm going to give you a few examples today I'm going to make a note of this, just to give you guys a couple examples. So that way you can actually understand what I'm saying and it's not just word vomit. You know what I mean? I'm not just saying words. I'm not just repeating the title over and over and over again. Like it's legit. And I need it to be ingrained in your head so that you don't just go by anything. And I'm going to, like I said, in today's episode, I'm going to give you a couple examples. I'm just writing this down right now so don't forget. So you guys understand, oh, that's what he means by it, right? Mm. And so as you're driving through neighborhoods or as you're driving through your city or markets that you're investing in, or you're, on realtor.ca or on Google Maps, you can literally look past all these houses and be like, that one doesn't work, that one doesn't work, that one doesn't work, that one doesn't work, that one doesn't work. Like I'll drive through the city of Edmonton where we live and where most of our investments are. And I can say confidently that most neighborhoods have zero opportunities in it. But I know all the little pockets, right? And that's valuable. That's very valuable. But most of the city doesn't work. And then I can drive through all the little cities between here and Calgary. Okay, let's go to Ponoka. Okay, let's go to Lacombe. Let's go to Olds. Is Olds in between there? Whatever. What are the little towns? Name some little towns.
I don't know.
Drumheller. There's nothing here. None of them. None. Zero. Zero, 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 zero. At least the way that we teach, right?
Mm.
And I'll explain to you why. But let's first read this question that came in so that you guys have a better understanding and context as to, this person's question. And then we can kind of dive into why and how to go about figuring all this out.
Mm-hmm. So we had a listener write in, and the question is, I was curious about something you said in today's episode about how most real estate is not a good investment, 99%. Oh, okay. Sorry, I should have read this first. Okay. I was curious about something you said in today's episode about how most real estate is not a good investment, 99%.
99% of, yeah.
Why most real estate doesn't work
I think he's
for
asking,
investments.
why does most real estate investments not work?
Mm-hmm. And how is it that so many people are getting rich off real estate then if it doesn't work?
That's a good point. And so,
Sorry,
so
that
the
was a little
question,
hard to
it's
read.
okay. It was written a little weird.
Yeah.
So what he's asking is that if 99% of it doesn't work, then how come so many people are getting so rich off of real estate? And we talked about the boomers yesterday. Talked about the boomers and how they've built so much wealth over the years. Owning real estate, owning an asset, real estate will go up in value over time. It will. It does, and it always will, because there's a finite amount of it, and it's also it's essential. Everyone needs a place to live. So, yes, they can keep on building, the urban sprawl. They can keep building out and out and out and out over and over and over again. But we're also we're procreating constantly as well. So the population is growing. More people are moving from different countries to our country because of the quality of life and opportunities. So not only are we creating more people naturally through naturally, we're all sorry, I just had to. I've been so serious this episode. I haven't done one thing. But also there's lots of people coming in from other countries to see the opportunities, and they're also procreating as well. So the population is growing. We need more spaces to live, and there's only a finite amount, and we can't build fast enough. And to be honest with you, at some point, we're not going to be able to build out anymore because there's so much procreating going on. So that's how you know that real estate is going to continue to go up in value. We need it. It's an essential thing for living. And so, yes, it will go up in value, but and so many people, if you own your home and you buy it, when you're 20 at $200,000, when you go to sell, your home, when you retire or when you move out of it, it's going to be worth over $1 million. It's going to go up in value. It's probably going to go up in value somewhere in the range of 2 to 3% per year, historically over the last 100 years. 3%, something like that, 3.5, I can't remember what it is. And it kind of goes like this over those 100 years, right? Yeah. But that's the average. If I were to compare, I just want to point something out real quick here, that if I were to compare real estate to other investment classes or types, asset types, say gold, for example. I don't know what the average increase in value of gold has been over the last 100 years, but I'm willing to bet that it's probably more.
Right.
I would say that gold is probably more. It's gone up more in value than real estate has over the last 100 years. Somebody feel free in the live chat, go Google it for me. Or even if not gold, something else. Find something else that's I'm not talking about crypto or NFTs or something like that, something that's been created that has a lot of hype behind it. But let's just be real and just, and I'm not even going to talk about Coca-Cola either. You know what I mean? Let's just choose something that's not necessarily essential, but something that's a little bit more reliable, that's real. And I'm sure that you can find at least 10 other investments that you can invest in that get higher returns than 3.5% per year. But we don't invest in real estate just for the appreciation or just for the increase in value.
Right.
And we're not just buying it like we buy every other type of investment 100%. We're not buying a piece
Like
of
all cash, you mean?
in all cash. We're not buying a house all cash.
Right.
Just like we would buy gold all cash. So if we had $500,000, would we buy $500,000 worth of gold or $500,000 worth of real estate? We're not going to buy the $500,000 house. Not if we know it's only going to get a 3.5% return yearly. That's a terrible investment. Throw it in something else. God, you can throw it in a GIC and probably get the same returns.
Yeah.
You know what I mean?
Yeah.
And you don't have to
Not
pay
have to be a
property taxes
landlord,
and
yeah.
insurance on it. You know what I mean? Like you're going to, it does not make sense to buy a piece of real estate all cash. And so if that's the case, then yeah, I would say absolutely. I love it when people say, yeah, but gold's got better returns. I'm like, yeah, it does, but we're not buying real estate all cash. It's not the same type of investment. What we're doing is we're actually going to the bank and saying, hey, will you finance this for me? I'll put 20% down. You bring the other 80%. And they say, sure, no problem, fam. We're just going to charge you an interest on the borrowed money. Okay, cool. So now we went from owning it all and having to pay the property taxes and the insurance. Now we got property taxes, insurance, and a loan payment, which most people looking on the outside in that have other investments are like, dude, why would you do that? Why would you? Yeah, sure, you're 5xing your return because you only have to put 20% in. But now you got to pay property taxes, insurance, maintenance, loan payment, mortgage payment. Why would you do that? It doesn't make any sense, right? Well, that's because even though it sounds bad, we're not just buying this and sitting on it. We're buying this and operating a business out of it. And that's the business of renting it out to other people. And then they are going to be giving us rent for the use of that property. You can't do any of those things with gold. You can't finance gold. No bank is going to let you buy more gold and they're going to finance, 80% of it and you're going to bring 20%. And even if you could, how are you going to make those payments?
Yeah.
You can't make those payments because you can't rent out your gold. People can't live in your gold. Right? It's not the same. Not the same. So when you compare it, you have to compare gold and the returns you can get on gold, whatever it may be. Has anyone give us an answer yet?
No.
For goodness sake, somebody help me out here. Figure out what the historical average of value increase of gold has been each year. Because what you have to do is you have to take whatever that number is and compare it to what we're actually going to do with real estate, which is we're going to finance it at 80% loan to value. So we're going to bring 20%. We're going to pay property taxes. We're going to pay insurance. We're going to pay mortgage. But all of that, the debt servicing, how we're going to service that debt, how we're going to service those payments is by renting it out, and the rent will offset those expenses, right? And so what we want to do is we want to buy properties that fit that business model or in that investment model. What I don't want to do is, let's say, for example, I buy a property. Let's use that $500,000 house. I don't remember exactly what the mortgage would be on a $500,000. I'm going to try and figure it out while I'm talking. I don't know exactly what you know what, let's just ask chat. Hey girl, how's it going?
Hey, I'm doing well. I'm here ready to help out with whatever you've got on your mind. What's up with you today?
I'm just on the podcast right now. I need to know what the mortgage payment would be for a $500,000 house, putting 20% down. So a $400,000 mortgage at 4.5% interest amortized over 30 years. What's the monthly mortgage payment?
All right. So for a $400K mortgage at 4.5% interest over 30 years, the monthly payment would be roughly $2,027. Keep in mind that doesn't include taxes or insurance, just the principal and interest.
$2,000. Is that what she said? 2,000, and then I'll give you real numbers. That's what I do. I'm not going to talk out of my ass, right? This is what we do. We're going to give real numbers. And if the value of the property is $500,000, we'll use 1% for property taxes, because Edmonton, and that's that would be about $420 a month approximately for property taxes, and insurance would be about let's say $150. I'll use $180 as it makes even math. The $2,000 plus $180 plus $420 is $2,600 a month. That's what your expenses are going to be. Okay. What I want to do, if I'm going to buy a property like that and I'm going to rent it out, at the very least, I want to know that the rent that's coming in is going to be more than $2,600 a month, right? Because I want to know that I can, at the very least, cover my monthly obligations, my monthly expenses, right?
Right. Yeah, absolutely. You don't want to be forking out money each month to keep it afloat. You want the rent that you're bringing in to be able to, hopefully at least, but more so, cover everything that needs to be paid.
And so the difference between the rent and those expenses is not your total profit. The total profit is going to be how much, every time you make a mortgage payment, a portion of that $2,000 payment is going to go towards the interest that's paid to the mortgage company, the bank, and then a portion of it is going to pay down the loan. So let's say on a 4.5%, I'm not going to ask Chad again, but on a 4.5% interest rate, let's say 1/3 of your payment is going towards principal, paying down the loan, and then 2/3 is going towards the interest. And that's a declining scale. So at the beginning, when the mortgage amount is higher, it will be more towards interest. And then as you get lower in your balance over the 30 years, more will go towards principal and less will go towards interest. So in the beginning, we'd say about 1/3, 2/3. I'd say, let's say $600 a month is going towards paying down the mortgage, and $1,400 is going towards the interest. So every time you make a mortgage payment every month, $600 is going down on the balance of that $400,000 loan. So you're building up equity. $600, $1,200, $1,800, $2,400, $3,000, $3,600, over and over and over and over again. It's building up equity. So the loan that you have left owing is less than what it started at. And so if you sell the property, you owe less than what you did when you started. It means that you will get more cash when you sell the property. Make sense? Yes. Equity simple. That right there is profit. The other profit is the difference between the monthly rent that you have coming in and the monthly expenses. So if you rented out this property for $3,000 and your expenses were $2,600, then there's also $400 a month in cash flow. So you got the $600 in principal pay down, mortgage pay down. Then you got the $400 in cash flow, right? That's $1,000 a month in profit, right?
Pretty sweet.
Less any expenses, right? Mm-hmm. So it's actually, you have to understand that. Plus, if the value of the property goes up, that's also profit. See, we got 3 different areas of profits here, right? So what I want to know is I want to buy a property. At the very least, to go back to what I was saying, at the very least, I want to know that the monthly expenses are covered so we can service all these payments and service the debt. Right? That is like numero uno. Now, just on that fundamental alone, most properties in Canada cannot do that. That's the thing. This is why 99% of real estate in Canada doesn't work as a real estate investment. The value of the property will go up, yes. However, if you buy that property with the investment model and the business model of buying it for the intention of renting it to make money, not buying it all cash, buying it, putting 20% down, getting a mortgage, paying the mortgage payment, paying the property taxes, paying the insurance, and anything else. If that is your business model, that's your investment model, 99% of real estate in Canada will not, the market rent will not be able to cover the monthly expenses. That's what we're talking about here.
So if I can touch on the bigger picture here, what you're saying is that the cost to purchase the asset is inflated more than the rent that we are able to bring in to cover those expenses.
Yeah.
That's where we are in a market cycle to say that it costs too much to buy a property right now. You're not able to get enough rent to cover it in almost all asset classes. And that there's only 1% of properties, less than 1% of properties where you'll be able to have the purchase price and the amount of rent that you can bring in to service that.
So I'll give you an example today. I told you guys I'd give you examples. And I'll just use the market that I'm most familiar with, I will. It's the easiest. What I'm gonna do is if you guys understand Edmonton, if you don't understand Edmonton, just go and grab a map, and it's very simple to see. What you'll see is Highway 2 coming up the middle. Here, I'll make it a little bit easier. I'll go like Highway 2 coming up the middle. Okay, and it goes all the way up to pretty much to downtown, and so that kind of like sets a line in between west and east. Okay, of Edmonton. Now, in the bottom, I'm backwards. Yeah. In the bottom right corner of Edmonton, below the Anthony Henday, which is the ring road that goes around, okay? In the bottom, over here, the bottom right corner below, which is Ellerslie, Chappelle, help me out here. What's the other new neighborhoods? And I'm brain dead right now. The one near 17th Street, Orchards, all that stuff down there. And you know what? So that's all that bottom right corner. That's right of the Anthony Henday and right of the Highway 2 and below the Anthony Henday. That whole section of new development there. And I'm even going to go across the highway. I'm going to go across the highway over here to Allard and Rutherford.
Cashman, just kidding.
Cashman, and the other Windermere, all of that whole section, Terwilliger, that whole section of Edmonton. I'm going to say this confidently. If you are looking to buy, most of those houses start at about $500,000. Okay. There's a bunch of apartment condos in there as well, and I'll make a blanket statement. But most of the properties in there are over $500,000. Okay, they all have either rear garages or attached garages. There's some duplexes in there that are maybe in the $450,000 range. All of them are pretty much over $500,000. Okay, and that can go up to as high as $900,000. Every single one of those properties will not cash flow. They are all negative cash flow. Every single one of them. Because the most that you're going to get for rent is like $2,200 to $2,500.
And we just determined that expenses are at least $26.
At least $26. And we didn't even cover all of the other types of expenses like, vacancies and repairs and maintenance and those types of things. And that's at a decent interest rate too. I mean, we were trying to do this 3 years ago when interest rates were 6%, 7%. Would have been negative $600 a month. Yeah. So people will look at a city like Edmonton. They're like, oh, everybody who says Edmonton's going up in value. It's got cash flow. I want to buy something in Edmonton. And then they look and they're like, there's nothing there. And then you can go into pretty much every other neighborhood in the city as well. And that's just talking about single family houses. We can do half duplexes. We can do suited houses. Suited houses have some opportunities. But we could talk about townhouses and things like that. Most of them do not actually cash flow. Apartment condos don't cash flow. Your $300,000 one-bedroom apartment condo in Ellerslie that rents out for $1,600 that has condo fees of like $450, $500 doesn't cash flow. So most of these properties, yeah, you can buy them and you can, and it'll probably go up in value, but you're not getting any cash flow. And what you're going to have to do in order to hold these properties, you can buy them. I'm not saying you, and you will be profitable. The problem is that what you're going to have to do is every month, you're going to have to take money out of your own pocket and support it. Mm-hmm. You're going to be negative $200 a month in cash flow. That means negative $200. Like you are short $200 every single month in order just to pay the expenses to own this property. You're going to have to take $200 out of your pocket every month. $2,400 every year through holding this property for 10 to 20 years to realize the gains of it, to realize the growth in the asset value every single month and every single year. And then what's going to happen is plumbing, is leaking and you got to replace the faucet and you got to call a plumber to do it. And it's $270. Well, it's coming out of my pocket because I don't have any additional cash flow going into reserve. Over. The furnace goes in 10 years. $7,500.
Fridge needs to be replaced.
For $2,500. Keep going. Furnace filters every 3 months or every 6 months? 3 months? High efficiency furnace you just put in, right?
Oh, yeah.
Oh, that's a $45 furnace filter.
Tenant moved out and needs to be repainted.
Oh, it needs to be repainted. Well, first things first, it's empty and we don't have anyone renting it. So $2,600 in expenses. And then how much does it cost to paint it?
$8,000.
$8,000. All of this is coming out of your own pocket. Does this sound like a really good investment model? And a lot of people, that's how they do it. That's how they do it. They're like, oh, but it's okay. I'm gonna make hundreds of thousands of dollars when it goes up in 20 years. Yeah, but what other investment class would you ever put money into it just to keep it afloat so that you can actually make money on it? Like if you bought gold, but the only way for you to actually realize the gains of the gold was to keep buying, to keep supporting it, paying, I don't know what to polish it. You know what I mean? Yeah. Hiring someone to polish your gold bars every month. That's the only comparable I can think of. If you had to keep paying insurance and gold tax and someone to polish it every single month and storage for it every single month just so that you could realize the gains from it, would you do that? No, it sounds stupid. Doesn't make any sense, right?
Yeah.
Doesn't make sense to do that. If you want to do this right, and maybe you buy that house and maybe you do keep doing it over and over and you keep supporting it. I bet you in 20 years you would still be profitable, even taking your initial investment of $100,000, right, to put the down payment on the $500,000 house, and you had to keep putting let's say $3,000 a year into it for 20 years. That's $60,000.
Yep.
So now your total investment is $100,000 plus $60,000. It's $160,000 investment. You're still going to pay down the mortgage. You're still going to have appreciation. The value of the asset's going to go up. It will still work. And that's to answer your question. Well, how come so many people get rich off of real estate? Even doing it wrong and stupid, people can still make money.
As long as you can support it.
As long as you can support it. Here's where it fails, though. It fails when people can't support it anymore.
Yeah.
It's all cool in the beginning. It's okay. It's only $200 a month.
I got a good job.
I can handle this. And let's just be nice and say they only have one property. It's doable. But what happens when the government shuts down the country because there's a global pandemic going on? What happens when your tenant can't pay the rent because they're not working either?
What happens when you get laid off?
Your tenant's laid off, you're laid off, nobody can pay the expenses, and you are forced to sell. Right? That's what happens. People get forced to sell. And you're already into this for thousands of dollars because you've been supporting it, right? And maybe the value, because of this, and everybody else is being laid off too, because it's not just your problem, it's everybody's problem. And affordability's down and interest rates are up and it's not a good time to sell. And you're forced to sell when you don't want to sell. It's not a good time to sell. And you sell when it's probably down a little bit because there's no demand, there's no buyers. And you're forced to sell for less. And you're in the middle of a mortgage term and the mortgage company says, well, you're going to have to pay a $10,000 early termination penalty as well. And you got to pay a realtor their $20,000 as well. You can understand this would be one of those series of unfortunate, events where like it all kind of came together. And I would normally tell you, if you ask me, should I sell right now, Wayne? I would say, fuck no, do not sell right now. But you have to sell because you can't float this $2,600 payment anymore every month because you could barely cover your own living expenses. You are forced to sell. This is how you lose money. And this is how so many people lose money is they are forced to sell when they shouldn't sell, right? And that's because they don't build it the right way. They didn't buy the right property. They didn't buy one of the 1%. Right? So yes, boomers make lots of money over the years when they have their home and they make their mortgage payments every month and then they pay it off and then it goes up in value. Yeah, you can make money in real estate. And a lot of people can buy shitty houses that don't cash flow or only have a little bit of cash flow and they can float it. And I know so many people that own 5 properties that they should have, in my opinion, they should have never bought, but they floated it, they made it work, you know what I mean? And they sold it and they made $1 million. Anybody can do that, but it's the risk.
Yeah.
At what cost? You know what I mean? Like, it's just too risky. And this is why so many people fail than people actually succeed. And you never hear about the failures because nobody wants to talk about the fact that they were so smart and they bought all these properties and then they did it all wrong and then they failed. Do you think they're going to be going around and doing public service announcements about how fucking stupid they were? No, you're never going to hear about those stories. You're only going to hear about when they bought it, right? And that's the problem. So you don't ever see the other side of it, right? You don't ever see the other side of people failing. We do. We do. Right? So we're trying to teach you how to go about doing it the right way. And that is, you need to find those 1% properties. You need to find the properties that are in the 1% that actually do work. The properties that have cash flow on day one. The properties that have so much cash flow that they pass the 5% rule. So that way, if rents go down, or if people can't pay their, if interest rates go up and mortgage payments, go up, and then your cash flow is suddenly, affected, it's okay. You started here and now you're down to here. It's okay. You still got extra cash flow. And you're taking that extra cash flow every month and you're putting it into a reserve. You're putting it into a bank account and you're just letting that bank account grow. 5,000, 7,000, 8,000, 10,000, 20,000, 30,000. Just let it sit there. And then so when a global pandemic happens and your tenants can't pay rent, it's okay. It's okay. I've got thousands of dollars in this account that I can cover that until they pay me back. Mm-hmm. You're going to get your money back from them. They owe it to you. Legally, they owe it to you, and you will get your money back from them. It's a separate story. But in the meantime, you got to be able to support this thing. And when the furnace goes, and it's $7,500, you've got the thousands of dollars already allocated for that. When the tenant moves out and it sits empty for a month because you got to paint it, you've got the money to cover the expenses for that month. You've got the money to be able to pay for the painting. It's all there. This is what I mean. But if you buy the right properties that are cash flow positive, that are so flush with cash flow, and that just work, and they have high potential for appreciation, it's so much lower risk. There's nothing that can come in that you could be scared of. Tenants not paying, tenants, moving out, interest rates going up and your mortgage payments going up by $400 a month, anything, any of those things. As long as you buy properties that pass the 5% rule, nothing can affect you. Nothing can hurt you. You're covered. And you'll never, ever be ever be put in a position where you're forced to sell the property, because that's when you lose money, right? So that's what I meant by only 99% of real estate doesn't work as real estate investments. What I mean is that what we teach and what I teach people is how to be the type of people that can say, I will never lose money in real estate, right? In order to be able to confidently say that, in order to be able to teach what it is that we do, in order for you to be able to say that, you need to buy the properties that are in that 1%. You can't buy 99% of the real estate that's out there, okay? This is super important. And I mentioned it. Did I pick up the book?
Is it still on the floor?
I don't know. Probably still on the floor. Dear. I mentioned it yesterday. Just go buy this book. This book will solve 75% of those issues. It will save you from 75% of the things that go bump in the night. Tenants, interest rates, market rents, vacancies, etc. What?
Sorry, nothing.
Tenants going bump in the night.
Yeah.
Underneath your bed. You're sleeping
No,
at the edge
I
of the
was
bed.
thinking
You
a
just see
different-
tenants'
No,
fingers coming up on
I
the
was
edge of the
thinking
bed.
a different bump in the night.
Hello there.
I was going back to your nice graphic earlier.
Oh, tenants going. Oh, that's another one too. How would that affect cash flow?
It wouldn't. It was just phrasing.
Okay. Anyways, this book right here, you can go pick it up on Amazon. It'll actually teach you like this. If you can buy properties that meet the 5% rule, it's all 75% of the things that go bump in the night. That's good. I like that. Honestly, it'll save you. And then you just need to learn about what types of properties and to have the highest potential for growth. That's really important as well, because you want to buy properties that aren't just going to cash flow. Some people, they focus too much on the cash flow, where it's like, yeah, I bought a property that cash flows, but 10 years goes by and it doesn't go up in value. And I own properties just like that. And I see people still teaching properties like that. They're like, hey guys, buy this property because it's got $500 a month in cash flow. And then I'm sitting over here being like, yeah, but it's been literally the same value for the last 12 years. And it's probably not going to go up for another 12 years after this. So why would you buy a property that is safe? It's super safe. It's a good place to park your money. You'll have cash flow, you have mortgage pay down, but you have zero appreciation. When you look at it over a 20-year period, what you're going to notice that your return on investment is terrible.
Significantly lower.
Significantly lower. And I can teach you how to avoid those types of properties as well. Because just because it has strong cash flow and it passes the 5% rule does not mean that you're going to get the best possible return on investment. It needs to be profitable as well. These are things like 5% rule will save you from 75% of the problems. And if at the very least, if you could just follow this rule when you're buying a property, you'll never fuck up. Right? You'll avoid a lot of the fuck ups. However, if you want to get the best possible returns, you got to know what types of properties that have the highest potential for appreciation as well, or that have potential for value add, right? You know, we're talking about the garden suites. You know, a lot of the properties that were, you know, you look at in Edmonton right now, for example, I can look at so many different neighborhoods in Edmonton where I would normally, you know, years ago I would have said, or, let's just exclude garden suites for a second. You know, there's so many neighborhoods I'll look at and be like, nope. They don't work. They're of the 99%. But as soon as you add in garden suites, you're like, wait a second, I could buy this property, but I can add a duplex or a fourplex in the backyard. Suddenly, all of those neighborhoods and all those houses that used to be a no are suddenly a yes. This is what I mean by opportunity here. We have so many neighborhoods, so many properties that do not make sense as real estate investments. If you add garden suites to them, they do make sense.
Cha-ching.
This is a huge land grab. This is a huge opportunity for you guys to be able to get in and take advantage of something. Because when it doesn't make any sense anymore, those properties will go back to being of no value to us. The only people that will buy them are homeowners and dumb investors destined to fail. That's it. But they won't be of any value to us, right? I hope that this helps you guys out. I hope it helps you better understand why I say the things that I say. And I hope that you respect the fact that when I say something, I don't just say it as a blanket statement or a one-liner. I will back it up with information and facts and mathematics. And I went through examples today, and I highly encourage you not to just listen to what I say, these one-liners that I say, like, oh, only 99% of this, and this. I encourage you to ask questions, verify, don't just trust, but verify, and then go and run the numbers yourself. What I'd like for you to do today is go through those 2 sections of Edmonton and check the market rents and check the values and run the mortgage calculator and check what the property taxes are and get your quotes for insurance, math it all up and see, was he right or was he wrong, right? Maybe you do find an amazing opportunity. Don't just trust, verify, right? That's how we teach. That's how we coach people. We don't just say things, we show you so that you can learn for yourself, right? Highly encourage you guys to do that today and this weekend. Come back on Monday. Tell me if I was wrong. I'm okay with it. If I was wrong, then I'll correct myself, right? But I hope that it was valuable for you guys. And I hope that it inspires you to go and find those properties that do work because they're out there, baby. I'm buying them, right? And our students are buying them. I want you guys to buy them too and create a better life for yourself. Okay? That wraps up today's show and the week. We will see you guys all on Monday.
And tonight.
And tonight at the Edmonton Garden Suites 101. I'll see you guys there.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.